Good morning, welcome to the AUDUSD Securities Markets Update. Beginning with the US figures, as always, that were released basically yesterday, the ADP non-farm, or starting with the ADP non-farm employment change, came in less than expected, rising by or adding only 212,000 in new jobs in February, while the estimates were to add around like 219,000, and this is the lowest monthly reading since April of last year. However, after the release in 10 minutes, after the official release in 10 minutes, January's data has been revised up sharply toward 250 instead of 213. The final services PMI also came in better than expected, rising for the second month in a row toward 57.1, up from 57, but while the estimates again were to decline toward 54.8. And finally, the ISM non-manufacturing PMI, also the official services sector, but also increased toward 56.9, up from 56.7, while the estimates, or while it had been anticipated to decline toward 56.5. In Canada, the Bank of Canada yesterday kept the current policy unchanged, keeping the interest rate or the cash rate on hold. However, the bank also said that inflation risk after last month's rate cut is more balanced right now, and therefore the CAD, or this basically had led to the Canadian dollar to rise across the board. The US dollar also yesterday finally broke above the 95.50 resistance area, and from technical point of view, reaching as high as 96.03 so far this morning. The monthly chart so far basically remains bullish. However, the technical indicator is heavily overbought. We're talking about the RSI is above 97, and even the momentum above 15. However, the index is also testing the 50% retracement on the longer term from 2001 highs toward 2008 lows, and the monthly close, which is, of course, it is early to talk about it right now, but a monthly close above 95.85, which is a 50% retracement, would clear the way for more or for another rally toward 101.70, where heavy sellers are likely to appear. But for now, we still need a confirmation for that. As for the Asian session today, there were a few economic releases from Australia, which had only a slight impact on the Aussie, but the Aussie remains higher across the board during the Asian session and even until this report is released. The retail sales increased by 0.4% in January, comparing to another rise of 0.2% in December of last year, which is basically the biggest monthly increase since almost 3 months. Moreover, the trade deficit widened again toward 908 million in January, comparing to a deficit of 503 million in December of last year, which is again the biggest deficit since November of last year. Going forward to the European session today, there are a few economic releases across the session, in addition to some key events which are likely to have a notable impact across the day. But beginning with the fundamentals, in Germany, the factory orders is expected to decline again by 1% in January after rising by 4.2% in December of last year. The key event will be the ECB and the Bank of England, as both banks will release will announce their decisions. Beginning with the Bank of England, the bank is expected to keep the current policy unchanged, which is unlikely to have any major impact on the markets or even on sterling. But as for the ECB, we believe that the decision is not significant today. However, there will be 3 key elements for today's meeting. The ECB will provide some more information and details about its asset purchases program, or the plan that is expected to kick off as early as next week, and traders will be watching the new inflation and the growth estimates. However, the execution of the ECB new asset has many challenges for now, as it is not clear so far if the ECB or the national central banks will lend the bonds that are purchased back to the markets. Also, it is not clear so far, or it's not clear yet, how the bonds will be purchased. Therefore, we'll be waiting for this information to be cleared by the ECB today. The euro yesterday traded lower against the US dollar, or across the board yesterday, following the US figures, breaking through this year's low, which was around 1.1098, reaching as low as 1.1058 this morning, which with such a decline, with such a break below this year's low, the way is now clearly open toward or further declines toward the psychological support, which stand at 1.10, while a break through that level or break below that support may open the way for deeper declines toward 1.07 areas. As for the US session, today we will be watching again some economic releases, a few economic releases, 2 economic figures from the US, beginning with the jobless claims is expected to decline back below 300,000, again to 293,000 last week, down from 313 the week before. But most importantly, we will be watching the factory orders. or the US factory orders, which is expected, or for the month of January, is expected to rise by 0.2%, which would be the first monthly increase after 5 months of consecutive declines. In addition to that, or however, if we see another decline, this would be the 6th monthly decline in a row, not seen since the financial crisis in 2008, which may lead the US dollar to pause the current rally ahead of the US jobs report tomorrow. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.